All right, good morning, guys. Welcome back. Happy Monday, July 7th, 2025. Hey, what's up, Andrew? The beach was good. The beach, the fireworks, all of the typical 4th of July stuff. And successfully didn't get a sunburn this year. Always a W. But all right, guys, happy Monday. Let's jump in here and kick it off with so a couple things here on the spreadsheet. If you're new to the room here, what I'm doing is taking a score from 8 different time frames. That score is based on all of the momentum criteria, the structure, the trend. Your best possible score for one given time frame is 15. And if we take the 8 different time frames times the 15, all right, the math would say your strongest possible score is a $1.20. Meaning your weekly time frame, your 30-minute, the 1 hour, the 4 hour, the daily, really, really bullish. So if we look at the indexes here, you have the QQQ, the perfect 120. The S&P's got a perfect 120. Dow Jones RSP got a 97. So they're not too far off. You have the XLK, the XLI, the financials, the SMH, and the Big 10 basket. They've got perfect scores. Bitcoin's pretty close here, 97. And then utilities 96, the ARC 95, XLC 95. Who else we got here? Broadcom, perfect score. Nvidia, perfect score. TSM, some Microsoft, not too far off. And then if we jump to the top 20, top 20 bulls, they're all perfect. If we jump to the master list, out of 200 names, 20 plus got a perfect score. And I think about, let me see, 80 and change of a score of 70% or better. So I think you can look at that one of two ways. One is, hey, things are really, really strong right now. I'm going to wake up, I'm going to buy a call, and I'm going to enjoy the push higher. The other point of view is, hey, things are so strong. And to be clear, I'm not going to look for a short till we get something like a 15-minute sell signal, 30-minute sell signal. But I think another way to look at it is we're maybe at a point of an extreme where the indexes are so strong, the semiconductors, the Big 10 names are so strong. They get so strong they begin to hit these extensions. So, for example, if we look at the cash S&Ps, and again, to be really, really clear, don't fight the market. Market going to do what the market want to do. But on our daily charts here, that dotted green line, that measures 3 average true range moves above your 21 EMA. All right, so from a probabilities point of view, the easy, strongest part of the push, it's usually the push from that 21 EMA towards the extension. You got the S&Ps above the extension, the cash QQQ, smooching the extension. Here's the SMH. All right, they're at it. Here's your Nvidia and your Broadcom. Nvidia hit it. The Broadcom, I think, hit it. Yeah, Broadcom's got a little room to run. What about your financials? The frisky financials. JP Morgan's at maybe your 4th ATR. But here's the key, guys. No 15-minute sell signal, no 30-minute. You've got the active buy trigger from a weekly down to a 30-minute. If they keep on painting that picture, it can turn into 4, 5, 10 ATR. What about a Goldman? Right, Goldman's been above it. So it's not a spot where we have, nothing written in stone, no guarantee where you got to get that bigger pullback. But if we take those top 70, 80 names on the board and look at them from that average true range point of view. All right, so here is Goldman at the 4.3 extension. Wells Fargo 3.7, S&P's 3.5, JP Morgan 3.4, the Morgan and the Stanley 3.4, Dow Jones 3.3, Bank of America 3.3. The SMH is at 3 ATR. Here's Nvidia 2.9, QQQ 2.9, AMAT 2.8. Only point I'm trying to make is we're at a point Where if you do wake up one morning and hey, you have QQQ 15-minute, 30-minute sell signal, S&P 15-minute, 30-minute sell signal. Take a Goldman for example. We're at a point where it could pull back. Again, I'm not calling for it, but just talking out loud here. Talking amongst good friends, it could pull back about 8.5 to 9%. Everything would look really bullish. Right? You rally away from your 21 EMA and you pull back to it. You push away from it, you pull back to it. You get a big squeeze going. You got the white arrow, the breakout, push, push, push. Even a dip to the 8 EMA, we're looking at like a 3.5 to 4% pullback. So only point I'm trying to make is you get into a market where we're gapping up every day, everything's breaking out, every call you buy makes money. It's fun while it's fun while it lasts. I've also seen, grab the cues here. I've also seen you'll have somebody with a $5,000 account back here. All right, and they're buying the out the money calls on the Nvidia, the Google, some Amazon, a little Microsoft, a little Meta, maybe some Broadcom on top. And 5K account turns into 7,000, 10,000, 12,000. And then one day the unthinkable happens. The indexes make a totally normal, totally healthy pullback to an 8 or a 21 period EMA. And the account that went from 5,000 to 7 to 10,000 goes back to about 2,000. All right, they keep it pedal to the metal. They keep on buying the out the money calls, the 0 day till expiration. Again, nothing points towards just yet. Here comes a flush in Nvidia. Here comes a flush in anything that matters. But we are at parts of a chart or spots in the chart where it could happen sometime soon. All right, so then you ask yourself, all right, well, what's the key here as far as can we keep it going? Do we pull back? What is the short-term gauge? And I think you make it all about your lower time frame signals. For example, if you spend the week looking at the weekly QQQ, yeah, it's bullish, and it'll look bullish down to about like $500 and change. I'm not going to give you too much context here as far as the short term. So I think in the short term, you're looking at maybe a 1 hour time frame down to a 5-minute time frame. Awful penmanship here. But that being said, if we jump to something like the QQQ futures, all right, I want to look over here at these labels, and green would be bullish, blue's neutral, and red is bearish. All right, and from a 4 hour down to a 5-minute, we're blue. Nothing really overly bullish, nothing too bearish. Can't jump in and buy that too quickly. Can't jump in and short that too quickly. The best mornings are you wake up and here's the NQ. There's a 2 hour down to a 5-minute buy signal. There's a really clean 15-minute squeeze setting up, 30-minute squeeze setting up. Makes your jobs a little bit easier. But we're neutral with a 1 hour squeeze. And yeah, I wouldn't want to buy that. I wouldn't want to short that. Way too much blue. Trend of the chart's neutral. Structure is neutral. Momentum goes bearish. They only got 5 out of the 15 points. If you look at maybe the S&P futures, for the most part, neutral. Blue on the 5, the 15, the 1, the 2, and the 4. So the key here is at the cash open, a good 5, 10, 15 minutes after we open, check the cash S&Ps, check the cash QQQ. What does that picture look like from a 1 hour down to a 5? Looking like a little bit of a gap down here, so I imagine. There won't be a 5-minute buy. There won't be a 15. If anything, they should keep the hourly buy signal. So then I got to think about, all right, if they gap down to 534, they're above the hourly buy zone, good structure, momentum. Got to be a little bit careful trying to short that too. But yeah, I think that's the biggest thing I could tell you guys right now. Um, I'm not looking to short the market, but as far as I'm looking for, uh, what am I looking for in terms of new opportunity? Number one goal right now is protecting profit from the last 2, 3, 4 to 5 weeks. So easy math here. If you made, say, you've closed about 10,000 in profit from early June up until this point. Maybe put yourself in a position with your new trades. So you jump out here today and you're buying Nvidia, you're buying some of the Google, and I do like the Google. You jump in, you open 2, 3, 4 new trades. In terms of position sizing, maybe put yourself in a position where you wake up tomorrow, S&P's QQQ or limit down. If all those trades expire at a max loss, maybe put yourself in a spot where you're only going to lose about $2,000 total. All right, I'll throw $500 at the Nvidia calls. I'll throw 500 at the Google. If that $2,000 all goes bye bye, I'm going to walk away here net profit of $8,000. And I think really important to have that kind of mindset when you're at those extensions. Um, reason being, it's not always going to be a gentleman's pullback. Meaning QQQ might not say, "All right, I'm getting a little bit tired. I'm getting a little tuckered out here, and I'm going to pull back into 550. Then I'm going to drift down to 547, 545." It's usually more of a, "Hey, we're bullish, we're gapping up, we're pushing, we're gapping up, we're pushing," and then one, maybe two candles, I pulling the bad boy back in. No time to hedge, no time to salvage your calls. So keep it small, keep it fun, and then hey, if they want to take it into, QQQ 590 from here, you'll keep on making cash. Just maybe not as much as you could have made if you're going out there with the full size. So yeah, be mindful of all that. And in terms of a couple things we're liking here, we've got the put credit spreads on the Palo Alto, which gave us a little bit of a run for our money there after the entry. All right, the old flush and the pop back above the 21. On a put credit spread, pretty straightforward. If they can keep it ideally above 199-ish. Ideally they gap the thing into 215 for us, but if they can't do that, if they can just keep it above that 21 EMA, it won't be a quick paycheck, but it'll be a paycheck, a premium paycheck. Where would I maybe want to jump in, get a little bit more aggressive? Buy the in the money call, buy the out the money call. Right, two neutral. No 30-minute buy trigger, no 15, no hourly. We need more green. But all right, we got the Palo Alto, and then for the Bitcoin futures, I'll show you the good, then I'll show you the problematic. The good, of course, would be the 2-day squeeze here, which for now I gotta like everything about that. Good structure, good trend, squeeze, white arrow. The problem would be if they can't get that momentum shift here on the daily squeeze. All right, take it through the checklist, and you got the trend, you got the structure, you got the squeezola. But right around, what's this? Right on your June 4th candle, on the daily MACD, you get that negative shift. Right, so they keep their trend, they keep their structure, they keep their squeeze, they lose momentum. And they pop it in, and they fail the breakout. Right, they flush, they pop it again, they flush, they pop it again. If we're trying to jump in here and call for a big breakout to a new all-time high, which I do think they could get if they could get that shift, momentum turn, fresh tank of gas, all those beautiful things. If they can't get that, it could be a lot like your previous weekly squeeze. The big boy from back in July till November of 24. All right, they pull it back, they trigger the squeeze. 21 above the 50, stacked EMAs, all the structure, really good trend. But a lot like your current daily squeeze, you go into it on that negative cross. Gas tank's empty, and they pop it and they flush. They pop, they flush. All right, so you're in that weekly squeeze from June, July, August, September, October until November. They don't give you anything until November when you finally get that cross. Momentum shifts, you get the buy trigger, get the white arrow. Then they give you the good stuff. So that being a poster child there, if they could do that on the daily squeeze, I do like it for a breakout. If they can't do that, it can be a frustrating trade where it looks, it feels, and it smells like they want to break it out. Just got that one missing ingredient. All right, and then from there, for a few of the typical household favorites here, rumor has it a big gap down coming for the one they call Tesla. I think a gap down to about 295 qualifies as a decent one. The only thing I can really say here, um, you want to be a little bit careful about getting too excited on the pop. Like, oh boy, here comes Tesla. We're back in action. I'm going to buy the 400 calls for July. Um, be a little careful with that kind of thinking. If you get these big pops and nothing actually changes, what I mean by that is they pop it from 290 and change in the 315. That is a respectable 8.5 to 9% pop. And yeah, sure, in a 2 to 3 day window, everything about that feels bullish. Oh man, big gap up. Here comes Tesla. Nothing changed in terms of the things that matter. Momentum profile, the structure of the chart. All right, they pop you into a falling 8 EMA and a falling 21. Doesn't leave you with a better looking chart. No 8 back above your 50, none of the important things. Now, that I shorted knowing you had a big gap down coming? No, but want to be a little careful on the pops there. Let's go jump to Nvidia. Do I want to jump in and take a massive swing position all the way up here? Not really, no. But until Nvidia's cracking the 8 EMA, until you have 15-minute sell signal, 30-minute sell signal, would I buy it on a really good-looking 15-minute, 30-minute squeeze for a short-term trade? Buy it on a Monday, try to cash out on a Tuesday morning kind of thing? Yeah, I would definitely do that. So perhaps a repeat of the move you had from back here. They pump it, they pull it back, they chop it, they squeeze it, they give you the white arrow, and the good stuff. All right, Nvidia, a little 15-minute action. Jump into Google here. Bigger picture time frame, but I do think the big to do. In the trigger that could make it a $225 stock eventually. It has got to be this monthly squeeze. Which, keep in mind, we don't get them too often. You'll get your 15-minute, your 30, the hourly, the daily, even the weekly squeezes, but the old monthly squeeze, they don't be coming around too often. That one kicked off a nice, call it 50% rally. You look at it from one of two different plates of opportunity. One is, all right, I'm jumping in and I'm going to take more of a buy and hold kind of trade. And I'm going to put my stop maybe somewhere under $1.60. That's about, we'll call it 10% and change below the current price. And I'm playing for a move into my target around 220, 225-ish. So in exchange for my 10% of risk, I'm looking at maybe 25-ish% of reward. You can buy shares, you can buy, really further dated in the money call, out the money call. The other plate of opportunity could be, all right, if they do break it out and fire the squeeze long, and I'm living through a moment in time like back here. You want to drill down, go find the 1 hour squeezes, the 30-minute, the 15. Go take shorter term swing trades on a 4 hour squeeze, a daily time frame, a 2 day time frame. You're moving and grooving, shucking and jiving across lower time frames. But the backdrop is all that momentum from the monthly squeeze having fired. Either way can be a great thing. And then shorter term for you folks here, like the Nvidia, um, you know, could you give me a 15-minute white arrow, a 30 in hourly? Could play a ball with that. Couple more here. Let's go jump to Amazon. Amazon, no issues with a 2 hour and a 15-minute, 5-minute. Right, Broadcom pretty clean. All right, so maybe a better way to look at it. Who's actually near that daily buy zone that we would actually care about? Here's Walmart. You got FTNT, the Bitcoin ETF, MicroStrategy, Google not too far off, Shopify, FAST. So I do like a few of those. Let's go look at the Walmart. Squeezes on the 3 day time frame, the 2 day, the daily, the 4, the 2, the 1, and the 5. So the idea of a 100 call for the July expiration could be one to ponder. And then Shopify, another decent looking daily squeeze. I shouldn't say decent, a really good looking daily squeeze. And then what about already looked at Google. I did have one more for you guys there. It might have been the FTNT. No white arrow, but pretty tight consolidation. Here's a kicker, though. I don't think it'll be a Google thing or a Walmart thing, Nvidia, Broadcom. Think it shall be an S&P QQQ thing. So again, the key here at the open, do I have a 15-minute, 30-minute sell signal? Do I have a 15-minute, 30-minute buy trigger? Or do things look maybe a little bit more like the futures? And quite frankly, just kind of lame. No green to buy, no red to short. Might have me walking my dog here at the open. But all right, y'all, any questions for me? Any chart questions, drop it in the chat. I will get caught up, get going through. But again, the advice I could give you is, the best advice I could give you is, don't be in a position where a very healthy and potentially a very buyable pullback would, wipe away a week of gains, a month of gains, have you licking the emotional wounds. They can gap down the QQQ about, 3.5% lower tomorrow. We're looking at a really good looking daily chart. But all right, guys, let me jump in and see what you peeps have got here. Get caught up from the beginning. Hey, what's up, Andrew? All right, Brandon, what's up, my friend? SOUN. All right, there we go. All right, we got a 2 day squeeze, a 3 day, and a 15-minute. All right, that's what I'm looking for, the white arrow. Okay, so until things change, bigger picture, that's your backdrop. The 2 to 3 to 4 could be dictated 2 day squeeze. Then from the alignment point of view, meaning they're going to fire that 2-day squeeze if and when they have a really good looking 15 and a 30, all the above. And they got a little bit of that. Yeah, I think it looks pretty good here for the most part. Like most things in the market right now, it could pull back, 3, 4, 5, 6%. Won't kill your structure, won't kill the trend. Could make for a good dip buy. But yeah, pretty clean for now. And then KC's got the Amazon. Well, here's KC on the chart. And then here's Amazon. Yeah, I gotta like it in the short term, but I would like it down to about 215-ish. I don't have any 15-minute sell signals, no 30-minute sell signals. Nothing says, hey, here comes a pullback. But I wouldn't buy it in a fashion where if I got that dip, um, it'd be a painful one. And then let's go check the call wall for the Zon here. Amazon call wall 225. Yeah, so that'll be your short-term level to tango with. If they can get it through to 225, they open the door for a bit more short-term pumpage. White arrow on the 2-hour squeeze, and then checking the 15. 15 could maybe get the white arrow here shortly after the open, which might be one to keep an eye on. All right, good morning, Ram. Ram's got the IONQ. Hope you had a good fourth, Ram. All right, what do we got here? I like the daily squeeze. The 4-hour squeeze is getting there. All right, as far as our daily squeeze goes, perfect score of 15, the white arrow. But from a timing point of view, you're just catching it on that fresh momentum shift. All right, goes through a negative cross back in early June. And now they're kicking off early July with a positive cross. And they kept their trend, they kept their structure, they got the big squeeze going. Yeah, I like it. Nothing bad I can really say about that one. Short-term thinking you're wrong, or I'd be wrong. Much back below 40, and you're probably playing for 50-ish. Yeah, nice. Oh yeah, so for the pointer, I'm using what's it called here? This is called Screen Pal. I'm a Screen Pal kind of guy. No, I like it. You got the little pointer, the pen, a few different bells and whistles here. You got if I ever gonna draw a triangle, I can draw my triangles. I used to use Camtasia, but I made a switch at some point. All right, folks on YouTube, good morning, good morning. Blue Tazo, COHR. All right, people in the futures here, everything just kind of eh. All right, CHOR. 2-day squeeze looks pretty sharp. Yeah, if they can keep it above 85-ish, it should be in good standing. They've done a lot of work here, back above the 50, back above the 21. Getting back above the 8 EMA, getting back above the 200 SMA. A respectable 11 out of 15. And I do like the fact they had a little bit of a test. Push, 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 kick it back. They did a pretty good job there holding that 200. They can keep on doing that. They might want to keep on drifting it higher. Yeah, pretty clean. I like it. All right, good morning, Ross. We did the IOMQ, and then Larry. What's up, Larry? AMAT. All right, guys, got about 4 or 5 minutes here. Like Nvidia, like the S&Ps, QQQ, like most things out there, One, it's really bullish, but two, we're also at a point where probabilities wise, they could kick it back into 185, 180. Nothing would really change. So then the key becomes, what's my 15-minute chart look like? My 30-minute. Those will give you the clues. And a lot of times, guys, the first clues are we're going neutral. On the way up, we've got a 1 hour buy signal, a 30, a 15, a 5, a 2 minute, a 1 minute. Then we get to a point where the 5 minute goes neutral, 15-minute goes neutral. So it's really bullish and then a little bit tuckered out. Everything's kind of losing steam. And then you get the 2 minute sell trigger, the 5 minute sell trigger, 15-minute sell trigger. And that can kick off decent little short-term flush. Futures have kind of got that neutral vibe, but no 5 minute sell signal, no 15. Haven't gotten that transition just yet. But if I'm going to take aim out here for a fresh idea, at the extension, I'd look for a 15-minute, maybe a 5-minute squeeze. Give me that moment in time. Lower time frame squeeze by arrow, entry near the 21 EMA, trying to play for the short-term push. And then better yet, if I can do that for a day trade, I'm in, I'm out, I got my piece. I don't really care if they gap it down to, $180 tomorrow morning. If anything, I'm thinking, all right, perfect. I played it like a fiddle. They traded it higher, booked the profit. Now I'm finally getting that bigger pullback. I can take my profit at some point, parlay it for a swing trade. Take my swing positions back here, catch the easy part of the push, take a little bit of that profit, day trade it, keep on trying to push, keep on trying to push. Then the pullback comes, reload. It's a beautiful cycle when they give you that. All right, guys, a couple more here. Got to go jump in the main room. So take two. A lot of squeeze action for the take two. 2 day time frame, the daily, the 4 hour, the 2 hour, the hourly 30, and the 15. I found this can be the toughest combination to trade. It's a lot of squeezes, a lot of compression, and then neutral signals. Can be a lot more of a glorified chop fest. All right, 4 hour chart, not overly bullish, not overly bearish. Same thing on your 2, the 30, the 15, the 5, the 1. So if we go look at maybe the 1 hour squeeze, right, that can be really, really tough to trade. It looks bullish. Maybe they're going to break it short now. You flip, you buy a put, they flush it, they pop it, you flip, you buy a call. It's just a lot of back and forth aggravation where, here's a little trade I did this morning. Not a big time frame, not a home run trade, but even for a little 5, 10, 15, 20-minute window, there's an easier moment in time to trade. I've got the squeeze, but I also have all the trend, all the structure criteria, 15 different things saying, all right, you might want to get long, try to call for that push. That can be easy, and your current hourly squeeze here, a little bit trickier. Little bit trickier. So now the key would be today, tomorrow, any point this week could take to get a fresh 30-minute buy trigger, a fresh 1 hour buy signal. Then you get in a little bit of lift, a little bit of oomph. All right, good morning, Eagle Eye. Good morning, guys. And then Casey, two more for you here. CRWV and CRCL. All right, CRWV. All right, not enough data for all of my little fancy pretty colors. Gapping down to about 158-ish. Anchor to your daily 21 EMA. Can they hold that on the gap down? And if they can hold it later today, later in the week, could I get a 15-minute buy, 30-minute buy? Maybe jump in and scoop a little bit up. And then CRCL. All right, it's at your daily buy zone. But if I'm going to buy it at my daily buy zone, I need a buy trigger. And that could be my next 15-minute buy, my next 30-minute. Right, and notice all throughout back here, you haven't gotten a 30-minute buy signal, which would be a green candle, a green bar. And they pop it, they dip it, they pop it, they dip it, they pop it, they dip it. It's just, it's not enjoyable to trade. If they can flip it, get a better structure, better trend, get the green candle, makes our jobs a little bit easier. But all right, guys, as always, thank you for kicking off your Monday morning with me. Hope you all found it helpful. Again, key advice would be, well, for one, you don't got to be the first guy or gal to short it. I'm not thinking short until I get, something telling me to look for a short. But at the same time, I'm not going to be the guy where the market pulls back to an 8 EMA buy zone or a 21 EMA buy zone. And I'm giving back all of last week's profits, all of the July profits. There's always going to be a little bit of give back. Try keeping that to maybe 10, 15, 20% of your closed net P&L. But all right, guys, good luck. And I'll catch you same time, same channel on Wednesday morning. Adios.